Tuning into today's talking point. I'm your host Niraj Shah, and the festive mood now starts building up with great fervor. We are a day away from Dhanteras, and it's an absolute opportune time to welcome in our current guest. He doesn't do too much of media these days. Vikram Kotak of Ace Lansdowne joins in on the show. Vikram, great having you. Thanks for taking the time out.
Thank you, Niraj. Thank you for inviting me.
Now, the pleasure is entirely ours. And at the onset, wishing you and team a great build up to the festive season. I wonder if you think the macro and the micro cues are facilitating a good build up. Do you think we are set right for financial assets or risk assets to flourish? Or do you think there are worries on the horizon?
So that's a great question to start. First of all, happy Diwali to you and your team. Have a great year ahead, and I hope the market continues to do what they're doing, despite of so much of global jerks and worries and all that. But let's hope for that. So I think it's an interesting question. So I think if you ask me a very short term, if I see a 6 months view, I surely there is a lot of headwinds around us. Whether starting from the monsoon, which has a spoiled spot at the start, then you have the second war, which has just started, and other than war, the global worries on the slowdown is still on a side with the higher inflation. So I think these are the few points where we are actually concerned. And also, if you look at the current quarter, the way earnings have started, I think almost 50%, 60% earnings have come. And I think most of them, I found a lot of people who are cautious. They like they like the growth opportunity, but they are very cautious in short term. So I think that's because of the rural stress and the maybe to some extent monsoon and the demand, trade supply chain is again disrupted globally. So a lot of things are not available. So I think it's a mix of a lot of things. And on the other side, where I see a positive, so these are the negative or these are the worrisome areas. But if I see a positive side of the India right now, it's looking so great. I think you pick up any headline number, right? GST to tax collection to auto sales to railway traffic, or even you take the airline traffic, you look at power consumption, SIP flows. I think unbelievable, unbelievable. I think these are the magic moments for India for after a long time where everything is falling in place, barring the global worries and maybe something here and there. So in a way, headline number shows a very different story. Markets are pricing it to some extent. And of course, there is a long-term opportunity in India. There is no one can say India cannot do well in next 10 years. I think it's the greatest opportunity we have right now with the short-term caution. And of course, we have two more events locally coming, which is the state elections playing out, and then you have the central, which will create a volatility. Results maybe we know later, but it will definitely create a volatility in the mind of people in the market. But I think it's a great market to be in. It's a buy on dip market all the time, as we all discuss. That you get sometimes a very erratic or very quick corrections, which actually gives the opportunity where we try to worry about the macro factors, but that's actually opportunity to buy. So I think it's a great setup. I can say that, yeah.
I was looking at a Bloomberg story, which and actually a JP Morgan note, which wherein they noted that each of the last 5 general elections, the build up to the elections, the market usually does well. I hear you say that you are concerned about the short term, which is the next 6 months, but data has it that the market usually does well. Could this time be different?
Yeah, so out of that 5 times, the 4 time markets were had not moved up before the 1 year. And so last 6 months, 8 months, markets of mid cap and small caps have done extremely well. So the valuation support was very different. So if I look at out of 5 times, which you're saying 4 times, the large cap mid cap gap was around 8 to 10%. Today, large cap mid cap and small cap gap is 20% plus. So mid cap has actually run ahead of the curve. So that's a sign of worry where you don't see result coming in the line, or the commentary doesn't come in the line, then you see a big correction on the stock. So I think this time the valuations are, I can say, price to perfection. It is not very expensive, super expensive. Now it's very cheap. So I think that we are even in large cap, we are at a cusp where anything changes will have the new ripple effect. So if it's a positive side, market may take up, and otherwise, so it's not a cheap market. It's not a cheap market.
Yeah, Vikram, actually coming on this aspect, because you got a very strong hold on this bifurcation between mid caps and large caps. I remember it since the Birla days, right? Now my question is this: even in this quarter, we've seen that demarcation wherein, let's say, for example, some of the EMS companies which may have come out with good numbers or commentary, they were priced expensive, they became even more expensive. I mean, we've seen that happening with Trent, for example, because of the Zudio performance. It's a terribly expensive stock. keeps on becoming expensive. And at the other end, there are companies like banks, for example, right? Banks are just not finding favor despite the fact that the earnings reportage has not been that bad. Now, what's happening? Why this dichotomy?
So I remember this, this match of Afghanistan and Australia. People are saying, you have to be long-term thinker. Pat Cummins, not the Maxwell. The Maxwells are Zomatos of the world, and if you become Pat Cummins, then you have one of the leading private bank in your portfolio staying at the same price for last long time. So I think market is very clearly, punishing the people who are possibly, either they are out of flavor or either they have supply side of it. Some of the stocks are not moving, in my view, because of the they're overowned by the foreigners, and they are sellers in the market, and they remain going to remain seller till US still remains elevated. I'm not seeing why should someone put in money in India when you get 6, 7%, 8%, including forward costs, or risk free. Why you want to come in any market in this kind of global volatility in setup? So that's the one side of it. On the other side, the stock which are underowned, which are, what is say, surprising you on the upside, people are chasing that. That's a typical market phenomena forever, right? Where you don't own and they surprise your numbers, then you don't care about, because then you start putting your Excel sheet 2 year further on the right hand side, right? And you say, okay, it's expensive in FY25. FY27 looks very cheap. So I think you start building that, yeah. But EMS story, coming back to EMS, it's a great story. And I think we are just at a cusp. Right? We just started putting our electronic things together, and we are still at a mobile phone journey. We have to go across the, the whole electronic side of it. And it's a great opportunity. I think it's a no-brainer for someone who looks at 5, 7 years, very high-quality companies you can pick up. Yeah.
Wow. Vikram Kotak has traditionally been somebody who gives a lot of regard to value, and Vikram Kotak is telling me that these stocks are expensive, but no harm buying them.
I'm not saying that. I'm saying that you wait for the opportunity. So this next 6 months will give you the enough chance to buy that. Like you said, a year back, some of the companies in that sector was available at half of the price today. But that was a great time to buy capital goods. Like, for example, a year back, I think I remember talking to you, or maybe some other, maybe your channel. The last year, same time, like Capex was, or maybe a 1.5 year back, Capex was possibly the best opportunity and the cheap valuation. It was a good combination of both. So you have to actually, pick up when the, things are worrisome in short term. So that is a great chance to pick up some of the companies.
Are banks in that bucket right now?
Yeah, banks are looking quite. I think I'm not very big fan of PSU Bank ever. So I've always liked private banks and some of the very high quality private financiers, and they've done well. Some of them have done well, but broadly, if you ask me, the worry right now is the elevated interest rates. Yeah, there's a rush for gathering deposit. It's a crowded deposit market because government also want to raise money. The capex cycle is on. The banks want to raise money. So I think I'm not seeing, and also the global yields are right now. Our global setup is still right now is not so easy. Right, crude is above 85, 87. It goes down for a few days. It again kind of come back. So I think net in a global volatility and the other yields are going to remain upwards. We are not going to see interest rates coming down in a hurry. On the other side, the demand for the money is too much. So I think I'm hearing from whatever calls I attended that they're looking to see the NIMs cannot go up from here. The NIMs may contract to some extent or may remain there. So that can actually cause a short-term problem. But otherwise, India, again, a private bank as an opportunity with the high quality of balance sheet, the technology, the quality of people who runs the company, a risk management quality. I think they are the great buyer. They're like a all-season buyer. Only the horizon of returns can change in some time there.
Got it. Vikram, your two pockets wherein you would, amongst others, that you would be very closely knowing it from a businesses that you run as well or associated with in a big way. Capital marketplace. We've seen some extraordinary performances by some companies there. You mentioned SIP flows. AMCs may not have done as well, but some of the others have. It's not a very wide bucket beyond AMCs. There is maybe one or two broker listed, one or two this, that, etc., CDSL, or maybe the exchanges. Good bucket to fish in, or not quite?
It's a great structural story. And again, when you talk about that 3.5% people or 4% people invest in mutual fund, or 7% of financial assets are in equity versus any emerging market at 40%, I think it's a great structural long-term story. Now, this, what unfortunately happens is, we get a 5-year return in 7 months. That's the unfortunate part. So then you always worry about the overvaluation there. It's a great structural story. Again, I'll like EMS. I'll wait for the right time to buy. We had a couple of capital market exposure which we trimmed down in last couple of months. Because again, great story, but valuations are now going, out of the way. Yeah. So that's the one thing. But it's a great opportunity for long term. AMCs are done well, I must say, in terms of making good franchisee. But as you rightly said, stock market performance is not as attractive as what happened in the case of the depository or exchanges or some of the brokerage company. But it's a great long-term structural story by far. I mean, so every dip you have to again go and say which are the stock to buy. This is one of the very, very important theme for next 5 years.
Okay. The other is this premiumization piece, be it malls, be it premium real estate. There is a car distribution company, there is a watch distribution company. All of those are talking about some very strong performances and numbers. Do you like that Uber premiumization kind of thing? And what within that bucket?
So urban, as I told you, urban looks amazing. Urban income levels, urban spend is still on the a very different radar. A lot of savings from COVID, post-COVID, things have started moving, up trading. I think this is on. The rural is missing, which is anyway don't live with the luxury and all that. So they anyway not much on the luxury side. Uh, Again, if I look at some data point, I normally track data points. So like Mercedes sells 30,000 cars in India a year, and China sells 7 lakh cars in a year. So I think again, long way to go, right? So opportunity wise, whether you pick up luxury cars or the luxury residents, so much of capital market profitability in last few years, post COVID, people have made tons of money. I think buying a $4-5 million house has now become very common in Mumbai, right? So you see on a pink page that these are the. So I think that space is going to remain attractive because there's short supply, clearly, right? How many malls you're building in a year in the country, or how many premium real estate you're coming up. So again, it's a strata kind of thing that. So this will continue to do well. The consumption is here to stay. We are so underpenetrated in every basket of consumption. So I'm again a big fan of consumption, and I think of course I missed out premium real estate. I didn't thought that they'll do so well. I was more keen to see that equity will do better than that. So but that sector has done extremely well. And look at the mortgage rates. I think that's the other thing to look out for. I mean, why it cannot do well, because 25 years back when I bought my first house, I was paying 18% to HDFC for my mortgage. Today I'm paying, if I have to buy, I'll pay 8 quarter or 8 half, maybe 8, right? If I negotiate well with one of the PSU bank, I'll pay 8. So 8% to 18%. I think this is the other very structural thing which has happened, 18 to 8. Also making people to take that leverage bet that it's not very expensive. I think I can earn 15% rise in my salary, or I can grow at 10, 12, 15% over a period of time. So I think that way, the mindset has also changed. People want to spend. And again, the young demography like and love to spend more. They want to do the different type of things, and also rightly so. So this trend will remain intact for long term. Yeah.
So across the spectrum, you like multiple pockets. I mean, at various points of valuations, but cars, watches, dip, malls, whatever.
So we played through food delivery, right? So last year, same time Diwali, we are a very bullish on food delivery company in India, and we played that. So I think so. You picked up whichever theme you pick up, and then you try to play. You may try to play through NBFC also, because they also in turn benefit. So we played through a real estate and also through a food delivery company.
Got it. Well,
but that's a great theme. Till time you're earning, your headline growth numbers keep on coming. Market is not going to punish you. Market is going to treat you like with a red carpet. The day you start fobbling on your numbers, then market will kill you. I mean, markets, you've seen that how markets react to the negative performance. Yeah,
most certainly. So Vikram, where is it that you find a mix of not so heady valuations? Because I heard you say on EMS, and rightfully so, thankfully you caution people that it's a great sector, but buy on dips. Capital markets may be great sector, buy on dips. Where is it that you find a combination of decent valuations, if not cheap valuations, and potential for growth?
So I think auto still remains on the top of my radar. I think both two-wheeler PV companies are looking. Still, I think there's some, and auto ancillary, not to miss them. They are also not very expensive, but they are showing a decent growth opportunity again for over the next 5 to 7 years, as under penetration is there. And plus, look at rural is struggling. So if rural start doing well, I think this can be actually, a very big delta. You can achieve very big tailwind you can get on auto sector. So we like auto sector. Like it about private banks. I think we are consistent bullish on private sector banks, despite of some underperformance by some of the banks recently. But broadly, we think that's a sector to be in. If you are believing in India story, and if someone is giving you 15, 17, 18% earnings growth year over year, I think you can't be wrong. And when the consolidation already happened, right, for last 2 years. So I think the valuations are much cheaper than the historical level, and that gives a lot of safety also. So I think that's the other sector we like. We are bullish on airlines. Of course, there's not
Uh-huh.
much to talk. There are only one or two companies in India, so unfortunately, you know which one we talk about. So
Yeah.
airline is a sector where I believe it's again a multi-year story. You can't go wrong on that multi-year story because again, data point wise, 1% of Indians comprise of 50% of Indian airline traffic. So again, that is a no. It's a no brainer. So that's the other sector, which is I hope there are more listed companies in airline space. So that's the one. I think some of the PSU non. I'm not on bank, but some of the PSUs also have a value. Some has done well in the capex side or defense side, but I think there is opportunity in the PSU where there's a good dividend deal and where the earning potential is looking good. So we're also bullish on a couple of PSUs on the PSU
Which sector? Which sector?
non-banks.
Yeah.
You'll guess it. You're
Acha,
very
okay,
smart
fine.
here. So
Okay, fine.
it's a dividend, higher dividend yield, lower P multiple, and reasonable earning upside. So
Fine.
that's the
Fair
yeah.
call. Fair call. Fair call, Vikram. I have.
And also the digital side of the India, where I don't know what people can pick up. Like I said, food delivery was a digital play in a way because you look at India today is around 39% of global transaction daily on the digital side. 70 crore people use mobile phone, right? They are going to do something new, right? So someone who enables a business to business, yeah, or can provide the technology support. I think digital will continue to be a big theme in India, not today, for next again 10 years. So digital is a small sector, very few companies, but you can pick and choose and you can see that who is enabling, who is cutting down the cost and time to do business, who is helping you to do the process innovation side of it. I think that's again a very, very big opportunity in India.
Got it. Got it. Vikram, one final question. Assuming that uh, most of the known events turn out the way the market wants, where is it? And I know the black swan is never known, the red flag is never known until it happens. But if you were to guesstimate, or if you were to constantly look out for that one data point which would make you nervous about the prospect of Indian equities, what would that be?
I think again, if you ask me, I'm not an astrologist. I'll not talk about election numbers and all that, but election can be one of the driver where
Sure.
market, what are the premium we are building up can move. If there's adverse results. Also, global setup is very, very bad. I think my biggest worry is global right now because heavy inflation, sticky inflation, yields are higher, and there's a slowdown in the many of the country. Like you look at example of UK, right? So, I mean, this is such a difficult phase right now, where inflation is not coming down, but the growth is completely gone. The jobs are cut. So I think so. There are many countries like China. I think people are saying 6 months China will recover, China will do well. I'm not seeing a sign of China recovering big way. Right? There's a huge amount of capacity, but there is a lack of consumption. There's a huge amount of leverage has been happen on real estate side. So I think that the global setup, both on geopolitical worries side as well as the slowdown side, is actually a big problem for Indian companies where they're connected in whichever way to the global setup, whether it's a tech or exports and all that. So that's the one area you have to see because without a good world, like someone rightly said that we need a slow world. We don't need a failing world. We also don't need a very bullish world because very bullish world will make your oil above 100, right?
Uh-huh.
So we want something which is mediocre, or I can say a 2-3% global growth. There is a peace everywhere. So that world is not there today, and that's the biggest worry. That world is required for India to have a continuous bull run. Otherwise, you'll have some kind of jerks and opportunities, and which is good for the market. But that's all. But also that's a one negative which I think is global setup. But what positive, which is very striking,
Sure.
is the flows by the HNIs and retail. I think this is a very new world altogether, right? In our times when you were managing funds earlier in the last setup, we were always worried, right? I remember 2008, I was CIO of insurance company, and I remember the hedge funds were selling. They sold 12, $13 billion of stocks, and market went half, right? Now today, I think they are not. I mean, of course, they are important, but today, look at the local appetite. And
Yeah.
it just started. It just started. So I think that is, I think, what I see the shield against if something happened dramatic globally. Okay, so we can't say that if the market globally, suppose a war escalation or something happens, if even if the market goes down by 10, 15, 20%, you'll see a good spring
Yeah.
back based on the earnings and the fundamentals. So I think we are that way. We are shielded. We are guarded compared to what we were there 10 years, 15 years, 20 years back. So that's a positive sign.
Cross fingers. May it last. Vikram, thank you so much for taking the time out and wishing you and yours a great festive season.
Thank you, Niraj, for hosting me, and happy Diwali and happy New Year to all of you.
Thank
Thank
you
you.
so much. And viewers, thanks for tuning in.